So I want to go ahead and touch on Meta stock because it's close to new all-time highs. And of course, this is one of the largest companies within the S&P 500. It's one of the companies within the Magnificent Seven. And I want to go ahead and provide an update from a fundamental perspective, talk a little bit about the company, and also provide a technical perspective towards the later end of this video. Now, we recently had an event from Meta where they unveiled a bunch of new products, and I want to go ahead and touch on this one particular product because it caught my eye.
These glasses are designed for performance. And on these, we push the battery even further. The camera is centered for perfect alignment for your shots. It's got a wider 122-degree field of view.
And so with the direction that Meta is going with these new wearables, I honestly believe that they could crush companies like GoPro, which, by the way, GoPro recently did 500+% in the last few trading sessions. And that's simply because of a deal with licensing with AI in their videos. We won't talk about that in this video. But essentially, Meta has the potential to do something greater than GoPro. And I think with wearables, especially with like the one I highlighted, and of course this isn't the only product that they released, but with the Oakley Vanguard, right, this is definitely something that could really target those that are in the fitness niche, right? And we know the fitness industry is a huge one. I'm personally on my own fitness journey, right? Working on, actually have the abs, Subtle Flex. Took a couple of months, and then currently working to run a marathon. Just recently did 10 miles. Don't bash me on the time, right? I'm getting better at that. But I could see this being something that's more people in the fitness industry are going to adapt and gravitate towards, especially with the capabilities and the name that Meta already carries for itself. And I gotta admit, when it comes to the wearables, I know Apple, they do their wearables with their watches, their earbuds. I was always skeptical about the wearables that go on your eyes. For example, I do have one of the Meta Quest, and one of the things I've always wondered is, well, is this something that's actually gonna have longevity? Are people really gonna buy into this? And I think one of the questions that we should probably bring more awareness to is, what does it do to your eyes? For example, I recently did a live with one of the members that are insiders at Push and Profit Research, and we were just discussing, just having wearables on your eyes. And I'll just play the clip over here.
Growing up, they're like, hey, don't sit in front of the TV, your eyes are gonna go bad. And then now, yeah. You wear the Quest, and then your eyes. So if you have glasses that are showing you, this like screen, right?
So I'm not too sure exactly. So take this with a grain of salt, but the way that I understand the little bit that I've seen about this, or the little bit that I've inquired about it, was that the pixel fidelity is so high, like on something like, let's say, like the Apple Vision Pro, that it's not the same as like standing in front of, like the old CRT TVs. This is something that's like almost as powerful as like, any OLED screen or any new TV. They don't say that about new TVs because there's no like graphical tearing or something. This is something that's going to be like almost like looking through the lens of your eyes. Obviously not that powerful, but
And so I think once there's more awareness that, these wearables on your eyes, they're not dangerous, right? They don't pose huge threats. We could potentially see this scaling up. Now, when we look at the fundamentals here, right now, this is the part that's important. Meta is still growing with its core business, which is advertising, etc. It's apps, WhatsApp, Instagram, Facebook, etc. But they're losing money on their wearables, right? They're growing on the top line with revenue, but in terms of actually being profitable, they're losing money, right? But I think that they're investing more into this space simply because they see this huge opportunity that maybe a lot of us are kind of overlooking. And I think I was a bit skeptical as well. But with that said, let's go ahead and kind of hop into my laptop and let's talk about Meta from a technical perspective as well. But before we do so, just a friendly reminder to hit that like button because it really does help out with the channel. Subscribe if you haven't done so already, and let's go ahead and hop into my laptop. So when we take a look at Meta, it's honestly not too far away from its all-time highs back in early August. It's honestly less than 3%. And the question is, well, is it going to maintain the structure and continue with the momentum going into new all-time highs? And a couple of things that we want to look at from a technical perspective is that it's still above its 50 period and its 200 period exponential moving average. It's still positive with the average directional movement index, right? D1 is still positive. And then when we take a look at the market profile over here, we see that it recently fell down to this area where we have more of kind of price distributed throughout time. So that ends up acting as an area of support. But what we also see is that this is also an area where we kind of consolidated. And so this might be where we see, demand, right? Where Meta falling down to this area, there's going to be likely demand holding it up. And if demand holds it up, well, as we push up higher, there's less price that stayed around for a long period of time over here. And so we know that when that tends to happen, price tends to move through the order books pretty fast. And so we could easily see Meta close into the year at like $350, which wouldn't be too far away from where we're at now. We're at, kind of zoom in, we're at 780 ish, and then if we go to 850, that's a 9% move that we could still potentially see for the end of the year. Now, when we take a look at the relative rotation graph, we see that the sectors that are kind of doing well right now, everything else is down, right? Everything's kind of moving down. We see communications kind of dwindling down, consumer discretionaries are weakening, everything's going to the lagging quadrant, with the exception of tech. Right? Tech is kind of the only thing, XLK is a tech sector, is the only thing that's leading. And we know that Meta is in the tech sector. So it's kind of one of the stocks where we're seeing a lot of capital flow into. And it may honestly just be protected against, everything else that's kind of having this rotation, right? When we take a look at the S&P 500 equally weighted, that's kind of like a proxy of market breadth. And we see that market breadth kind of has been falling downwards. It hasn't been, moving in a linear direction upwards, as opposed to when we take a look at the S&P 500, right, and not equally weighted, right? So this is the S&P 500 equally weighted. When we take a look at the S&P 500 not equally weighted, we see that's pushing up. And so why is that? Well, the S&P 500, right, it's weighted with the mega cap names like Meta, Apple, Tesla, and so those names are holding up. But when we take a look at the S&P 500 equally weighted, those names, they're kind of they're not pushing up to new highs, but they're also not pushing down, and so that shows some weakness. And so what that tells me is that the run for Meta isn't likely to just continue to have the same strength that we saw pretty much in the beginning of September, right? So at the beginning of September, we saw this nice linear almost looking move. I don't know what I'm trying to say. This linear looking move upwards versus where we may end up consolidating but slowly closing the year up higher, right? So that's just something that we want to look at. Now, what could influence the direction of Meta? Well, one of the things I shared in this week's free weekly Market Pulse Insights, which, by the way, if you don't know, every single week I send out an email of what's going on with the markets. And in this week's email, right, we talked about Tesla a little, as I cover about Tesla often, but we talked about how Tuesday, September 23rd, Fed Chairman Jerome Powell has his speech. And this is really crucial to pay attention to, because there was kind of a lot of vague language from the last FOMC meeting. And so, yeah, we had rate cuts. It was expected that we were going to get the 25 basis points, but there wasn't that clear commitment of the path forward, right? He wrote that he even noted that all the different paths laid ahead by the Fed are still possible. And so, there's still this uncertainty. Well, are we not going to get rate cuts as we close into 2025? We're not going to get any more. And so that's why we kind of want to see if the language changes with Fed Chair Jerome Powell this Tuesday. And then another chart I shared for those that got the email. By the way, this email is completely free. It's going to be the first link in the description of this video. And I send out this email weekly. I may not send out the email next week, as I will be going on vacation, but you are probably going to want to sign up, because I send out this. I rarely go on vacation, and I send out these emails weekly, right? And it kind of gives you a glimpse of what's going on in the market. And so what this chart shows over here, this is by Goldman Sachs over here. We see that a lot of retail has been kind of piling into the market, And oftentimes, when we see retail kind of piling into the market, we see institutional investors use that as like exit liquidity, like let me sell into the strength. And I talked about in you know, for those that are insiders at Push and Profit Research, as well as this free weekly market pulse insight, that you're probably gonna want to have your trailing stop losses, because we make just consolidate and kind of fall down a bit. Which honestly, if we fell down for Meta, I would be more than glad to see Meta if we kind of touch the 50 period exponential moving average to kind of scoop up some more shares. But just to be a little bit cautious, I'm still bullish on Meta going forward. It's, you know, it's part of the tech sector that's where we're seeing capital still go into. But we have to also understand, when there's a lot of retail capital coming in, you know, hedge funds, they look at this and they're like, oh, market's at these all-time highs, we have retail piling in, let me go ahead and sell out. And so, you know, if you are in a position with Meta, don't get shaken off. Of course, you know, you want to look and average in. Of course, always trade and invest in whatever you see value in. Don't do whatever I say or whatever I do. But I will look to see, you know, this week, are we going to see anything from the Fed influence Meta and the mega cap names? And if we do see Meta consolidating, I may kind of start scaling into the position. And even if we fall down, I'll wait to see if we hover above the 50 period exponential moving average, and I'll average in some more over there, as I really am you know, bullish for Meta, and I'm looking to build a more long-term position for Meta. But with that said, hopefully you guys got some value in today's video, and I'll see you guys on the next one. Take care, guys.